Today, Friday, December 19th, market analysis, Stan Ehrlich. I will not be making recordings next week, Christmas week, but I'll be back Monday, the week after, kind of like Thanksgiving. So, my commentary is going to be a little bit longer term oriented today, but not much, an extra week or two instead of a little shorter. And I have lost some of my material on my charts, no RSIs, unfortunately. At least my annotations are there for support resistance lines of any kind and stuff like that. But it's also just a red-green body of standard candlesticks, not the custom coloring that I was doing before with detailing days that were ER signal days, and these ovals are a little too low. Otherwise, here we go. The E-mini, and I start with indexes, go to futures, and go to a few stocks. The stock indexes, I still think, are in the process of topping out, despite the fact that yesterday was a fairly good upside day, rally day, mostly, and today was very good, a little bit better. We are really, perspective-wise, only about halfway back up for the break that we have had, and much more importantly, the last time we tried to make a new high for the whole trend, the MES, micro E-mini, S&P 500 general, did make a new high for the trend. And it came very close to the previous high, which was back on October 30th, a month and a half ago. So we have a definite potential 6 week or so double top. That's the important formation at the moment. Certainly closing above the old historical high on, what was it, 30th of October would kill it or start to. In the meantime, I will not be surprised to see next week that the market stabilizes and or go down, and my favor is going down. And next week making lows lower than Wednesday's low of this week or yesterday's low, depending on which one's which on the symbol, and starting to continue to be more convincingly bearish into the Santa Claus rally, which is, in theory, historically, from what I've learned over 53 years of doing this, we have come to the conclusion that buying 1/3 of your position, whatever it may be, let's call it 300 shares. Buying 100 shares on Monday of next week, 3 days before Christmas, trading days before Christmas, buying another third of your total, another 100 shares on Tuesday of next week, and at around 7 o'clock in the morning on all 3 days. And the third day is Wednesday of next week. Excuse me. So that's your now 100% complete long, 300 shares, whatever. It's your total call. And that's how we get into the Santa Claus rally trade. 7 o'clock a.m., Monday, Tuesday, Wednesday next week. We use the S&P 500. So for our research. Now, Wednesdays, no trading. I'm sorry, Thursday. Friday, you hold on to your position. The bad news historically about this technique is it's only around 70 or 80% profitable in the last 30 plus years. The October lows are better, much better than that. And there's no protective stop rule. Where's your stop? Where's your stop loss order? I don't have an answer to that. You're supposed to blindly, unfortunately, and I never recommend that. Hold on to the trade until the first trading day of January, second trading day of January, and third trading day of January. And when I get back, I'll tell you before the first day of January when the time span is to get out of the trades. But at that point in time, on those 3 days, you get out of 1/3, 1/3, and 1/3. Or I like the concept of putting a very tight sell stop under your long position and letting the market potentially improve its value or maybe decrease a loss. We hope not, but it hasn't got no guarantees here, obviously. All right, let's just keep going. Now, this rally on a 5-minute chart that you're looking at on the MES starting to make new highs in very short increments, 1 day or less of time frames. Looks like pretty much daily since the high of the market occurred. And again, it's coming back up into a lot of resistance. So I'm still expecting it to turn down. Next, of course, the spider is extremely similar. No major changes point blank. And the 5-minute chart on the spider. Still a lot of messy lows and highs and stuff like that in here of resistance. Next, QQQ. Better, stronger, more bullish story. Now we are clearing the highs by a substantial amount of the last 3 trading days, but on the average, we are still only a little bit more maybe than 50% up from the last break low. And that break starts at what I think is the last shoulder on a head and shoulder top. And I apologize, I didn't put this arch mark above the highs 3 out of 4 days in a row, December 5, 8, and 10. Coming down to prove that this is the last shoulder high, bouncing right now, not badly enough for me to change my mind about that. The top is obviously always the highest high, in the middle usually 1029 is the date. The first shoulder high was a bearish engulfing, and it was on October 10th. I remember that being an ER sell signal. Yeah, it's got a red circle around it. So again, even though it's clearing some resistance, which it had not done in the last 3 days, I'm not changing my mind overall, but it is a little uncomfortable. And there's the 5-minute chart. Now, MNQ is extremely similar to the triple Q. New high close, 3 days. But we got a little resistance there. The price level for the shoulders is nice. I did put little arch marks across the tops of that chart. That's good. I really can't call it a double top because they're not that close to the previous top. And the downside objectives are on your screen. I haven't mentioned them much, but this yellow line, I should move up a little bit. The bottom of it is the downside objective 21,628, 27. Next, kind of stopped in the last few hours like the other 5-minute charts, but didn't really start to go down either. YM, not quite as strong. Nevertheless, new high close last few days, but not a new high. And the 5-minute. Okay. Russell, around the high of this historically important resistance area, which looks like has again, like 5 or 6 times in the last 3 years, stopped at around the same price levels. And a couple of weeks ago, a week and a half ago, it did it. So I still think it's on the way down. And the 5-minute. Okay, you can always pause this, by the way, as you well know. Bonds rallied yesterday, right smack dab up to the neckline, which I pointed out and even made a comment about how that would be a great spot to be going short. The close yesterday would have been a small profit. We went down a chunk more today. Great. Made it lower than yesterday's lows. The day it tested the neckline from below. Great. This is working just almost textbook perfect so far. The downside objective is 112.09-ish. I need to close below 114.16 to jump up and down. Nothing wrong here so far. Fail safe buy stop is probably going to be in the ballpark. You can change it, of course, over low 116s. Next. Notes are different. It turns out this long-term bull trend line it was tested on the rally yesterday, along with bonds testing its neckline, and both have turned down. Now, notes did have what looked like a good head and shoulder top, but the problem is after the downside breakout that started to close above the neckline, below the neckline, above the neckline, and yesterday shot up a lot more, but touched the trend line. Is this going to revive itself and start closing below the neckline again and then making new lows again? I would find that very unusual, but I can't rule it out. And then I'll start talking about the downside objective again. Right now, I'm just a little bit baffled at the way this is working. It's certainly not historically classical from a head and shoulder standpoint, but you've got lower lows over time. You've got lower highs over time, including yesterday's rally, and it did test an old trend line. Next, crude, maybe a double bottom forming. I think it did get oversold on that low. I don't remember. No RSI, unfortunately, guys. And we did close on a firm note. Nothing real super here. We got to start clearing some resistance if this double bottom concept is going to start to pan out. It'll be pretty good. It'll cause a rally up to Well, looks like way back up to 67-ish if it worked. Natural gas. Also the possibility of a longer term low. Back in October, it bottomed out where it's trying to bottom out right now. It's only been 4 days. We don't have any higher highs over a longer period of time, which is what you want. Let's see what happens. Heat, lower low, but it doesn't stay down there. Did close a little lower on the day and where it lowered and where it opened. No particular indication this is changing. I don't think it's oversold. It's going flat for 4 days. Now, this is a head and shoulder top that is working just great. Heating oil, we got the shoulder, the head, shoulder, neckline. Looks like they're drawn a little too high. Okay. Break out of the neckline, test of the neckline, new lows, new lows, new lows, new lows, new lows, and today another new low. We are already halfway down to the minimum objective of 1.9. Hey, tell me what's wrong about this. Maybe it's oversold. And yes, it's around some support of significance, not to be um, forgotten about, disregarded. Next, heat. Whoops, didn't get the note. There we go. Gold, silver, platinum, copper may have a double top in gold. I really can't tell you too soon. It's real close, and I believe it got overbought. Remember, I don't have any RSIs. And it looks like it probably could have, would have, should have. So watch for a top in gold and also silver. This is a outside trading range day, a golfing day. Same thing, just the old school words for it originally. And it was bullish on the close, higher on the close. But remember, in overbought conditions, which this sure as hell is, at very high levels, I remember, just a little under 90, maybe even more than that now. That's screaming bloody murder that it's about to top out. So I've got to nickname this, as I have once in a while, a bass backwards reversal. Normally, an outside up day looks bullish, usually is. But under especially extreme bullish RSI levels, this frequently produces a high day. Find out next week. Platinum is basically in the same situation. It is exactly the same, actually. Bullish engulfing, extremely overbought. Wow, there's 2 out of 3 precious metals. Now, we did make a new high in high grade, but it didn't stay there at all. It closed okay. I don't see anything bearish about this. It's certainly hardly overbought at all. Probably not. Just a little resistance. I'm looking for a little bit higher. This is terribly oversold, as I recall, in soybeans. It has reached our minimum downside objective on the head and shoulder top, which worked just great 4 days ago. And now, boom, 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 3 more days. It's just getting more and more tempting. Buying calls, writing puts, doing some kind of a bull strategy and options, obviously going long. I would be putting a buy stop above this market based on a new long position, not getting out of a short, or could use it for that also. Pretty tightly. Next, touch support in soybean oil. Also, I think this is oversold. Is almost down to our minimum downside objective now. I've been talking about since it started, 46.90. Today's the lowest, 47.50. That's pretty darn good. The trade is pretty much completed, but I like to see it reached or exceeded, like beans, meal, whatever. And I still expect the objective to be reached again, 46.90-ish. But I'm a little worried about it hitting support so accurately and being probably oversold. So it might bounce a little first and then down again. Okay, meal. New low close. Probably a bit oversold or getting pretty close. I can't come up with anything substantial to cause it. Let me tell you, it's going to bounce right away. It's got elbow room down below. It got a little support, but nothing great that I can tell. Here's corn, doji, lower close, trying to form head and shoulder top. I've been very discouraged about the last week and a half. It should have gone down, stayed down, and gone down more, and it started to go down. But now it's back up to where it was a week or two or three ago. That's not normal. I do have the neckline still here drawn, and I do have the downside objective, which keeps getting cheaper and cheaper, lower and lower, because the neckline slants down and it hasn't broken out yet. If it ever does, I'm getting a little, this is kind of weird. Next, double bottom potential for wheat. It's been only a couple of days since it tried to bottom out or go under and stay under the October lows. It just got there and turned up a little, not much, not much evidence, but the right kind of activity. And I do see some potential in that. Let's just watch. Okay, Apple, little higher close, nothing going on, still just as bearish as I was for last week or three. Overbought conditions, if I remember correctly, caused the top, nothing else. And I don't know, could be forming a little bit larger top. I'm still expecting a gap to get closed. We're talking up about, this is off slightly, about 253 and a quarter, but big support down starting at 240 and under. Next, Tesla. Doji, lower close by a little, nothing going on, but we did have almost a bearish engulfing 2 days ago. Overbought conditions, as I recall, much lower close, and the low is almost lower than the previous day's low. We still have a gap to finish closing. It's already closed a little bit of it. Then we don't have any major support because you're already under it, and that has broken a double top that was. Well, it turned into a triple. Well, triples are rare. Rare as a snowball in hell. They just don't happen very often. So I would say no, something else. But bearish, maybe down to the tune of around 400. Next, NVIDIA. Good support under the market, bounced off of it back in late November, bounced off of it again here on Wednesday of this week. A little rally today and possible little tiny gap, maybe not. But resistance above is pretty profound. I'm still looking for support level to be tested again down to 164 and then even lower. So I'm looking for another bear swing to the downside. AMD, pretty much the same commentary. I think it's topped out. I think the support that has held a second time, and we just got a couple of day bounce, is going to end up giving way soon. You guys have a great Christmas holiday. I will not be doing the recordings next week. Remember buying at around 7 o'clock in the morning on the stock market index basis California time. On Monday, Tuesday, and Wednesday, one third of your stock index position. We use the S&P, and profitable trading to you.